So I have a chart in front of you, and as you can see, it's a simple line chart. Most people would recognize that we are going from the lower part to the upper part. It's been choppy along the way, but this is a basic line chart, and most people, even outside of the trading community, would recognize what this means. However, when we trade financial instruments, we have the ability to trade several different chart types. In this particular video, I'm going to look at candlestick charting. This is probably the most common type of charting in the Forex markets, for example. It is becoming more popular with stocks and commodities as well, so it certainly makes sense to understand them. On the candlestick chart, I'll go ahead and switch over to that now. You can see things change quite a bit. Again, it still looks choppy and it looks like we're rising, but we have colors now. Now, the first thing that I would say about candlestick charting, normally you will see like black and white, red and green, blue and white maybe. The idea is that the darker of the two is negative and the lighter of the two is positive. So if you get a black and white chart, the negative candles will be black, for example. So the first thing that you see is that we have been grinding away to the upside for some time now, but here recently we have fallen, and you can see this confirmed by several red candles. I'm going to go ahead and zoom in again and get a better look at these candlesticks. The question then becomes, how do you read them? Well, there are a couple different things to look at. When you have a candlestick, and I'm going to focus on this one right here, you have a body, so you know that it went higher during the session. So the bottom, the tick here of the body will be where we entered, and the top will be where we exited this time frame. You can see that we started and then went higher. So for example, over here on the left hand side, this is where we started and that's where we ended because it's red. So that's how you know. In this case, green means that we rose, red means that we fail. You can see that these two candlesticks are fairly similar in their shape, but they went in opposite directions. Now looking at these, there are a couple other things that you'll want to pay attention to. There are the wicks of the candles, and that is the little lines above and below. They don't have to be there, but what this means is the highest level that you had reached during that candlestick is there and the lowest there. Each candlestick represents a specific amount of time. In this case, I have it set at the daily. So this was the range of the euro dollar for that day. Because of the ability to glance and see the color-coded part of candlesticks, it's very easy to tell how the market's been behaving lately. I'll switch to a 15-minute chart and you can see that this part of the day was very negative. This part of the day was very positive. We went back and forth. When I go to weekly, you can see that we have been grinding higher over the course of several weeks, but you can also see that we get positive action for a little while, a little grind lower, positive again, a grind lower. So there's different ways to look at this. This is the monthly chart, and you can see that there were several months of negativity in the euro. Now it seems like we are consolidating overall from the longer term perspective. There are a lot of different ways that you can read candlesticks, and that is definitely beyond the scope of this video. This is just simply to show you exactly what part of each bit of the candlesticks means. So you have the entry on the left hand side, which is always going to be on the left hand side. Then you have the exit on the right hand side. Depending on the color, depends on or shows how the candlestick plays out. So you can have a candlestick that has a body like this and it's red. Well, that's negative, or black, or your darker color, or whatever you choose. A lot of times you can change that in your platform. So this means that you started here and you ended there, and the wicks just show how much volatility there was, how much farther outside of that open and close range you ended up. So when you go back to the line chart, you can see that, yes, it tells you that we're in these areas, but this simply just plots a dot and then basically connects it at the close price. This tells you the actual action during that day. Some candlesticks, and as you go through your training in candlesticks, will tell you specific things. They'll tell you perhaps there might be more strength than weakness, even though there was not much of a body. So this candlestick here, you can see we opened up here on the left hand side and we closed on the right hand side, basically the same price. We did fall a little bit and we rose quite drastically. But the thing I would bring to your attention here is that we did not hang on to the gains. The body is almost non-existent. So this means that we tried to rally and failed. That shows that perhaps the buyers don't have the strength that they had shown earlier in the day. They couldn't keep those gains. This is why candlestick charting is so powerful, because it gives you more than what the line does. Because with a bar, you see the same thing, and the candlestick, you see the color coding, and with the line, all you see there is that we closed there. You don't see that we tried to rally and failed. So that's what makes the candlestick so uh, potent. You can also see things like, we had a fairly positive candle and closed towards the top of that range. That normally means that the buyers are firmly in control. A lot of it comes down to the psychology of what's going on. So remember, the color determines which part of the left is the beginning and which part of the right is the end. And of course, the wicks show the volatility during that time frame.